So before we dive into our questions, I would love for each person to introduce themselves and provide a brief overview of the organization you work for. Louise, we'll start with you.
Thank you, Lauren, and hi everyone. Great to be here. My name is Louise Andersen. I'm from Danske Bank, based in Copenhagen. Danske Bank is a sort of both full value chain provider of financial services in Northern Europe, covering as well personal customers and corporations. My role in the bank is being globally responsible for implementing Treasury solutions to our corporate and institutional clients in all markets. And prior to assuming that role, I've been working in the bank with the strategy development, M&A, and transformation. And prior to that, I've had a career in consulting, advising financial services clients on those same topics as well.
Great, thanks. Matt.
Thanks, Lauren. Hi, everyone. I'm Matt Henderson from Stripe. I'm the business lead for the EMEA region at Stripe. And you may know Stripe as a payments company. Our mission is to build economic infrastructure for the internet. And that is really extended beyond payments to software products and increasingly embedded finance products for many of our users. So super excited about the topic today.
Great, Henrique.
My name is Henrique. I'm a co-founder and co-CEO here at Brex. And at Brex, we're doing financial services and financial software for the next generation of companies. So we do corporate cards, cash management accounts, as well as expense management software and bill pay software for our users. We started pretty strong in the startup market, and we have a good amount of technology companies using Brex, but since then we expand into a lot of other sectors as well.
Awesome. Thank you, everyone. So we have a great group. I think we'll dive deep into these topics, and each represents a different part of the ecosystem. And I think we'll touch on what their individual organizations are providing, the benefit that customers are receiving, and where we see some future disruption. So to kick us off, I was reading a study from this summer that found that the value of the embedded finance market will exceed $138 billion in 2026 compared to about $43 billion, which where we are today. So there's a lot of opportunity, a lot of expected growth in this space. And I think that's all good news for your organization. But I would love to dive into what's the impact on the customer side? What is the value of embedded finance for the end users, and why are companies making such strong investments in this space today? Henrique, do you want to start?
Yeah, for sure. So I think that, embedded finance in one shape or form exists for, a couple of years now, right? I think the first version of it, in my view, was with the affiliate websites for credit cards, like something like Credit Karma or NerdWallet. And that's, I think, the, first most simple version of embedded finance, in which a consumer went to learn about financial products, and based on his or her learnings, they would click a referral link and move on to possibly sign up for that credit card. It was a incredibly light touch experience that allowed consumers to make a better choice of their financial products, right? And I think we're moving to the world in which there is now a lot of shades of doing that, right? From something fully integrated in which non-financial companies are building their own bank accounts and credit cards and all of that, right? And I think you can see with Apple doing Apple Card, or Shopify doing Shopify Balance, right? Like, in which they're competing directly with financial services. I would say that's on one end of the spectrum. And then the referrals are on the other end of the spectrum. And there's something in the middle, right, which I would say is where Brex plays along the most, which is, hey, if you're not going to go the route of rebuilding an entire bank competitor or banking product competitor yourself, but you want to be more than a referral, there's something in the middle that you can do, in which you have deep integrations with financial services, in which the experience of your product plus our product, for example, results in a better consumer experience, right? Like, an example of that is I think what we have with LegalZoom partnership that Brex has, in which we make it incredibly easy for businesses that just incorporated to get access to our business account with just a few clicks. And different than the referral programs, that they had to refill everything out and do everything from scratch. There's like some sort of deeper integration there that makes the process a lot easier. And over time, we're going to keep integrating deeper and deeper. But I think is an example of a middle of the way of not building your full competitor, not just being a referral, but having kind of like this deep product integration, which I think is incredibly powerful. And I think this creates new revenue streams for everyone, like it's new distribution streams for the existing players, right? So for us, it's a channel that we didn't have access before, and at the same time, for our partners, is a revenue stream that they didn't have before, and I think that allows both organizations to keep investing more in servicing their customers better. So that's some of my thoughts on the topic.
Matt, maybe we'll go next to you because I know you're also a bit more in the fintech space, and then Louise will end because I would love to see what a traditional banking player thinks. So Matt.
Yeah, sure. So starting a business and marketing and reaching customers, it's changed so much on the internet in the last few years. But really, if you take stock of financial services today, it's still a bit like 1999. And, it's actually more than half of business users when they set up an account. They have to go into a branch, have a face-to-face meeting. They have to schedule it. They put on a fancy shirt and tie, and they fill out paperwork, and it takes a week to get the account going. And that feels like 99. And then when they try to get credit to keep their growth and fuel their growth, they'll frequently face a very sort of old-fashioned process. And actually, lending to small businesses is still down 40% compared to where it was in 2008. So there's so much that for the end user, the small business, or for the consumer, is about access, and it's about optimization. That it still represents a lot of value that embedded finance can create. If you take a user example, like a business like House Call Pro that works with tradespeople like plumbers, and imagine if you're a plumber and you are building up an asset, you're growing, but you want to employ somebody, and a traditional financial institution doesn't kind of know how to value your business if it's just been you in the past as a single operator. Whereas often the software company that you're using will really be able to know and understand and value things like the number of 5-star reviews you have that are verified, and can equate the difference between that and how that gives you a tradable asset as a plumber. That means that you are a low credit risk for employing someone else and expanding. And so for every niche business, for every trade, for a lot of different consumer situations as well, there's an ability to optimize at a much more granular level than what the traditional sector was doing in the past. And that's just going to create a ton of value for consumers and businesses alike.
So Louise, how are banks responding? Because I know you're a bit of considered an incumbent player.
Yeah, and I'm fine with being that, of course. I think there's a lot of opportunities in this space, both for banks, for non-banks, and for fintechs, but also for end users, consumers, or corporations. And if we start with some of the professional players in the game here, banks, non-banks, or fintechs, benefits typically lie in either increased reach, or the ability to enrich your offering with a service or sort of a feature that is not as easily accessible for you, or you have to make tremendous investments in order to gain it. Particularly for the banks, I think the reach factor matters quite a lot. The ability to be present in other channels than your own proprietary ones, and be closer available when the need arise. That could be, for instance, for consumers doing sort of online shopping and having the ability to get a sort of payment in installments directly in the sort of the shop, but also corporations being able to get access to short-term funding. To, if for instance, if you're a growth company looking to manage your liquidity on a day-to-day basis, and you're facing a big transaction coming up, having financing solutions available in your treasury management system or your P system or whatever you're using enables you to balance your liquidity and potentially stay afloat and avoid bankruptcy. So that's a tangible benefit for customers too. I would also say for fintechs, and there's a big benefit in the having an easy access to services that might not easily be available for them, particularly processes or products that require FSA approval or license, and getting that in place is we know is a very big investment for new players. So by tapping into that from an incumbent player can get you up and running faster. We have a number of examples. One of the local ones in Denmark is an insurance sales company, Fintech, targeting freelancers, which is a segment often overlooked by sort of the corporate pension schemes. But so that this Fintech is targeting that segment in particular, but haven't invested in the FSA license and haven't invested in rebuilding the investment service and the insurance service. They're tapping into that from an incumbent pension fund player in the market.
No, that's all helpful context. And I think we've talked a lot about the opportunities, the new revenue streams, the benefit to the customer, all the really great things that come along with embedded finance. But maybe let's flip the coin a little bit. What are some of the risks and challenges in entering this space? There's changing regulations, there's cyber, there's evolving customer preferences, the need to be agile. What are some of the big challenges that you all are facing and need to consider when rolling out new embedded finance products, services, solutions?
I'm happy to go first. One of the challenges is just the fragmentation in the industry. And so that can present itself with different regulatory environments around the world. But it can also be that there's different partners that, if you're trying to construct products yourself with many different direct relationships, can just add to the fixed cost of creating a new product and service. And so often when you're being innovative, actually what you really need is to be able to experiment and move quickly. And so this is one of the reasons why you see businesses like Stripe, businesses like Brex, that are playing this role as an intermediary. And actually, this is a sort of innovation that's both enabling banks to increase their distribution and to sort of reach a more, often a more sort of narrowly targeted product to the market. But it's also enabling the other side, the often software platforms and consumer-facing and small business-facing businesses. It's making things a lot easier and helping them avoid risks, because otherwise you do find that this is an industry where it hasn't grown up with kind of elegant API documents, and it hasn't also sort of emerged really as a consistent global industry yet as well. And so we find we often speak with companies that want to explore embedded finance opportunities, but their business is 40% in the US and 20% in the UK and 20% in continental Europe. And the difficulties that they have in navigating the traditional finance industry is just adds to that fixed costs of innovation. And so removing those fixed costs, removing project risks is certainly a critical part of enabling that innovation in the industry.
I'm
happy to go next.
Okay, great, thanks.
I think that there are some very successful embedded finance relationships, and there's some that are, not. And I think that a lot has to do with the intent of the customer behind it. So I think I'm a little bit scared that, everyone is getting excited for it, and then, everyone starts trying to cross-sell loans or whatever to their customers, and only a handful actually work, because I think it needs to make sense, right? The reason it worked for a credit card and others, because people were shopping for credit cards, and wow, I can buy it on while I'm shopping. But if you're shopping for I don't know, a camera, and someone is trying to sell you a home loan, it's not really relevant. And I think that the revenue opportunity is so big, and the distribution opportunity is so big, that I predict a lot of these partnerships, kind of starting out and being unsuccessful. And my fear is that it kind of it takes out some of the excitement because of some of these unsuccessful trials. Versus, I think embedded finance needs to be something that's in the end helping the consumer in that task that they came to do already with you, right? And I think buy now, pay later is a good example of hey, they're trying to buy this product, let me give you financing for this product, right? Or in our case, hey, you're incorporating a business, let me open a business account for you, which is the next logical step. But if you try to do something that's outside of the natural order of what a consumer or a business would want, I think that has a high chance of not working. Even if it is something the consumer wants, there's still a high chance of not working, because these relationships are complex. And I feel that finding the exact moment in time that that someone is willing to buy a financial product within your existing service is very special. And we should definitely invest in finding it, but there will be a lot of trials that don't work beforehand.
Yeah, and if I can build upon that, I fully agree with both Matt and Henrique. And I think there are mainly two themes of challenges that, at least as an incumbent bank, we're looking into. The one is what Henrique is alluding to, that this is an evolving space, right? So it's difficult to really know whether you're making the right bets in terms of finding the right partner, because we see new players emerging all the time, and we also see the dynamics changing, and new technology is contributing to that. So it's difficult to make the right call. Another challenge, particularly for an incumbent bank, is that you have to be mindful of compliance. You have to make sure that if you partner up, if you, for instance, let an external partner be sort of responsible for part of the customer experience in your your value chain, can you guarantee for sure that you are adhering to existing or all of the compliance regulations you have to, be that sort of protection of personal data or the integrity of the credit decisions, etc. And that is of course something that requires a lot of analysis up front, but you have to continuously monitor as the technology and use cases are evolving, to make sure that you are still in that partnership, adhering to the integrity and the regulations aligned to your business.
Makes sense. With all the good stuff comes the things that you need to consider as well. All the potential hardships that come along with making these products successful. So, Matt, I'd like to talk a little bit. You mentioned APIs, and I know that a big focus for Stripe is building APIs to enable software platforms to easily offer services to their users. But why did Stripe make this strategic decision to focus there?
Yeah, it's really because often it's the software platforms that know their end customers the best. And so they're often sort of really the ones providing the workflow for which this product will be embedded. And, that might be receivables financing, or it might be, Stripe works with a company based out of Ireland called Glowfox, which provides order management system and booking software for gyms and salons and health studios and stuff. And they know the small businesses they serve extremely well, and they're sort of in the workflow of things that those businesses are doing, and therefore have the data and the relationship to be able to make credit risk decisions well, but also make something very easy for them to adopt. And so you get this relevancy that Henrique is saying is so important. And so that is part of the reason why it's been, an important starting point for us. And what we've found is, in part because of that relevancy, you then see the impact of how it's affecting the small businesses they serve. And so we actually just released some information today about Stripe Capital, which is that the small businesses that have taken Stripe Capital loans have grown 114% faster than the comparable businesses that have not taken those loans. And it's because it's often going to the place where there's clear visibility of the potential for success that just needs to be unlocked by sometimes small amounts of credit that are enabling extra inventory, enabling extra lines of supply, and so on. And so this sort of impact on small businesses is really kind of the lifeblood of the economy, and it's gonna help technology companies, the software companies providing it, but also underlying underwriters and providers of the credit and other financial products.
To build off of that, when you are selling the business case for these software platforms, who within the organizations that you're partnering with are you targeting? Are you working with product? Are you working with strategy leaders? Are you working with technology leaders? It seems like all those lines and roles continue to blur and converge. So who in the end do you need to sell on the benefits of Stripe's products and get their buy-in to help inform their organizations and ultimately partner with you?
It's an interesting question, actually, because we historically, the kind of often the advocate for Stripe is an engineer whose time is going to be freed up if they're working with something that enables them to move fast and easily. But I just came from a user meeting earlier this morning, and I spoke with the CTO as well as the CFO, and it's this combination of both that is both helps to understand the art of the possible and the pragmatism of what's possible, but also the strong thinking about the business case, and that has really taken a lot of what technology companies can do away from being kind of a cost center to being an enabler of growth. And that's especially important where it's enabling the user to open up a new product line like this.
Awesome. Henrique, moving over to you, I know Brex is a new player. Your platform has a competitive advantage by being able to incorporating customer feedback quickly and getting new products and services to market quickly. How are you able to be that agile?
Yeah, that's a great question. I think one of the core beliefs that we had at Brex is a lot of the lack of innovation in the financial services sector comes because everyone is building on top of legacy technology, right? So if you look at most banks, they run on top of some, core FIS, Fiserv, Jack Henry stack that, was implemented, 20, 30 years ago. And a lot of bank executives, they have amazing ideas of products and services that they want to provide to their customers, but then it gets to IT and it's like a whole thing and it's hard. It's going to take 3 years and $50 million to develop. And I think that ends up just a lot of great ideas being pushed into the drawer because, it's too expensive to modify in the tech stack. And I think what we did at Brex, right, is since the beginning, we decided that we wanted to develop our core technology from scratch and not rely on any of these, legacy vendors. So, from the general ledger to, all of our system that, does our collections to, the KYC systems, like all of that we've built in-house. And, we use point vendors here and there for, specific things, but I think the system of record and all of that is Brex, and I think that allows us to move a lot quicker and innovate a lot quicker. And I feel that that's an advantage I would say that fintechs have, is not having to deal with the legacy systems, and it's something that can compound over a long period of time. So every time I get questions like, "Wow, what you did, it's like so smart. Why didn't every bank do that?" And like, I can say, well, a lot of smart bank executives actually had the idea before. Is the execution on top of the existing tech stacks that make it like super hard. I think you're mute.
Sorry, I was double muted. The joys of Zoom, and even though we've been using it for so long, there's always still technical glitches. What I was saying was, I think there are a lot of benefits, and I do a +1 to all the ability of having a custom platform, debating whether to modernize a legacy versus start new. How do you think about incorporating automation, artificial intelligence, and some of these other technology tools when developing your platform? And do you integrate, and how do you integrate with those other technologies?
Yeah, I think that, a lot of the, having the basics right kind of allows us to do, some of these more complex tasks, right? So, and I remember talking to someone from a big bank, and like one of the issues they had is like they had like 6 systems in which customer records were stored, and I think like us having one system in which customer records are stored, I think makes it a lot easier to implement some of these newer technologies. So I would say that we focus on getting our basics right, and then we look for the best in breed in each department in order to help us develop better products for our customers, right? So in terms of, for example, AI ML, there's a Brex customer that's also our vendor called Scale AI that we use for a lot of our AI ML needs. And I think that besides, our internal teams as well, but I think understanding who are the best vendors, and a lot of times the best vendors in AI ML, they're not the best, super enterprise vendors, right? So I think like a lot of times there's the vendors that end up getting into big companies are those who are really good at working with, the Accentures of the world to go and implement in your existing like SAP stack. And they spend all these engineering time thinking about how to connect with the existing thing versus I think a lot of the new, more modern Silicon Valley vendors spend most of their engineering efforts trying to build what are the best ML systems, right, and recruiting the best engineers and all of that. So I think, being able to experiment and test out new vendors and startups that are just emerging, and also invest heavily in the, best of breed companies that come out of Silicon Valley. And I think we have an unfair advantage because a lot of them are our customers, so we kind of see and have relationships with them already.
Fair point. So Louise, I'd love to talk to you, and you mentioned earlier the need for collaboration to really spark that innovation. And I'd love to get your perspective on who you think is going to win in this space and how will they win? Will there continue to be all these new entrants and fintechs disrupting the space? Will there be collaboration, alliances, or partnerships between some of these players and traditional institutions like Danske Bank? What are your thoughts and perspectives on this?
Well, that's a great question, Lauren. I think to the point about are we going to continue to see new players emerging? Yes, I think we will for the near term, because there's still a lot of funding available, startup funding. So that is, of course, making it possible for the entrepreneurs with good ideas to actually get up and running and get some scale. And that is going to continue to the dynamics in the near time. I actually like to think in terms of who will win. I actually like to think that both new players as well as incumbents have a fair shot at winning. there's definitely some value to legacy, even though it might also be a burden at times. So there's definitely some value in getting that learning under the skin and having that underway. We see some new players. I have some examples here from the Nordics about neobanks starting up, and they're demonstrating impressive growth rates for a few years, and then seem to be stagnating as they hit sort of the point where the FSA starts being maybe more demanding in terms of compliance procedures, and they have to invest in that area too. So that's slowing the growth down a bit. But that being said, I think actually both types of players have a fair shot at winning. It's important to be mindful that investments in winning is needed. This is not just an area where you can walk around the corner and then there's the treasure waiting for you. No, it will take investments, whatever you venture into. The provision of financial services require a lot of investments in regulatory compliance, but also in terms of building that credibility and integrity in the eyes of the consumers. We know at Danske that our customers really, none of them are really interested in having a burdensome or tedious daily banking operations. They simply want that to be easy and safe, and from a provider they trust. So those three things we find to be drivers of long-term customer loyalty and satisfaction, but they are also factors that take long time investment and dedication to achieve.
Mm-hmm.
But anyone who's willing to make that, I think, can win, of course. Was that a comment? Okay. Well, then I'll continue then. In terms of then, what is then the sort of the winning recipe? So if assuming that everybody actually has a fair shot at winning, I think that the winning recipe is really about getting the combination right, figuring out exactly what is the right set of integrated choices that together make you unique and have a superior value proposition to a select customer need in a specific context, and really sort of make sure that you consistently deliver upon that. I think that is definitely sort of the main reason for winning. It's not necessarily easy to achieve, and it does require a bit of energy devoted to figuring out exactly what is actually on my customers' minds. What are they trying to achieve? How can I, together with whatever processes or solutions I'm representing, and whatever a partner can bring me, how can we together make that a more holistic and better offering to meet the customer's need?
So what are some investments that you think companies should be thinking about now and making now to help compete with other players? Like, are you taking more of a let's modernize our technology infrastructure? Are you saying we need to double down on customer research and really find out the right products to respond to the customer needs, especially in this ever evolving and move to digital with COVID? I think that's really sparked some of those trends. Like, what angle are you taking to help make some of those decisions?
Well, there are many areas that we're pushing on in terms of investing. We have an abundance of data, and really deriving value so that you can act upon that is an area that we're investing in. We also see sort of an area like fraud becoming ever higher up on our customers' minds. So the more security we can provide in the sort of the payment transaction flow, and how we can use advanced technologies like machine learning to screen for suspicious transactions, or reassure customers that their payments are actually ending up with the intended beneficiary. That is definitely also an important area of investment. And now I represent, of course, at Danske corporate customers, and corporate customers have for decades communicated with banks via file transfers. And that is definitely an area we see a sort of a domain change in. Now there's a lot of files going on, and I think we at Danske support hundreds of file formats through various channels. It's very wide catalog, and what we're looking right now is to make and invest more heavily in other forms of communicating with third parties and customers. most likely via the API, as building up a rich catalog of APIs that our customers and partners can tap into for access to functionality or data.
That makes sense. So I'm going to ask a really hard question and ask everyone to predict the future. We're winding down 2021, going into 2022. What are some of the trends that you think are here to stay versus fads that may stay back with 2021? There's been a lot of new ideas, a lot of pilots of things. I think the consumer behaviors has drastically changed over the past couple of years. So what do you think are some of the big things that we should keep top of mind and our audience should keep top of mind going into 2022? Louise, I know you mentioned data. I know you mentioned modernization. I know you mentioned building that brand loyalty and really enhancing the customer experience. Anything else that you want to build on there that's more broadly just maybe reflecting on buy now, pay later, or some of the other trends that we've seen come out of the past year or two?
Yeah, I think one trend we haven't talked about so far in this session is sustainability, and I think that's definitely a trajectory on the rise. We see at Danske sort of impressive growth records in terms of sustainable finance offerings, green bonds, green mortgages, green loans, green investment funds, and we're continuously sort of exceeding our own ambitions on setting targets in this area. So I think there's a lot of unexploited potential in that. And we know it's rising also to top of consumers' minds and top of corporations and also public authorities' minds. And we are right now already incorporating ESG factors into our credit decisions. We are using it to advise personal customers on making the right sort of investment choices for their home, making their home more sustainable. And sort of giving them easier access to funding to make those investments in realizing that. But I think there's also an unexploited area in making individuals as well as corporations better equipped to make informed choices about how they spend their money, how they sort of direct their investments, who they partner with. For instance, combining data from a variety of sources to give consumers, for instance, a picture of out of my sort of everyday weekly spending choices, what is actually my climate footprint, and similar for corporations, looking across my value chain from all of the suppliers I engage with globally, what is actually my global footprint in terms of the toll I'm taking on the climate. I think this is definitely something we're going to see more of in the years to come.
So two trends for me. One is consumerization. Like we've talked about it a few years ago with software sort of transitioning from the consumer market to some of the lessons learned in the consumer market, transitioning to B2B software. I think it's going to happen in finance as well, and fintech as well. And so, think of BNPL for businesses, think of wallets for businesses, checkouts for businesses. I think there's a lot that the B2B industries can really pick up and innovations and user experiences that can pass over from consumer to business. The other trend is globalization. It's kind of an oldie but a goodie. It's still there's still a lot left to be done. And one of the coolest things that's happening right now is actually some of the most exciting tech businesses in fintech are coming out of not just Europe, but like Africa. You think of Jumo in South Africa, of Paystack, now a Stripe company based out of Nigeria. And so it's just super cool that this is an industry where there's innovative leaders from around the world.
Yeah, I was going to say globalization. So I'll build on top of that a little bit. I think that with remote work and with the changes we've seen in COVID, the world got a lot smaller. Just at Brex, a lot of our hiring was all US based. Now it's international. I think a huge percentage of the Y Combinator batch is starting remotely and starting hiring people all over the world. So I think the future solutions in fintech, both for consumers but also for businesses will need to be like inherently global. You know, you've seen the, you know, one of the markets that I'm most excited about is, you know, remote payroll, for example, right? Like how do you, I think, you know, the challenge that they have there is like, how do you have the payroll experience be the same no matter where you're hiring, right? And before that was a multinational problem. It was a, hey, okay, like I'm a massive corporation and I need a massive system that does this, but now it will be the reality for a lot of smaller businesses because they realize that, you know, they can get amazing talent everywhere. And how do you streamline that experience? I think that's going to be huge moving forward.
Yeah, I think from my perspective, where do you customize versus where do you commoditize? And I think there might have been a trend to win business and ensure a great customer experience. You want custom, custom, custom. But in order to make some of that globalization and convergence, it might need to be a little bit more commoditization. But how do you strike that balance so you don't dilute the value prop for the end consumer and still make it targeted and relevant while also figuring out where to streamline and where to make it more of a commodity. So I think all some interesting things that we'll look forward to in 2022. I know that we have a couple minutes. Just wanted to see if any questions came in from the panel, for the panel, Alicia, if anything did. If not, I think we ended on a great note. All right, I'm not seeing any additional questions coming in from the audience. So thank you so much for your time. Hope you all enjoy the rest of the conference. We have a lot of great upcoming events today. So thank you once again, and I hope everyone enjoys the rest of their day.
Thank you.
Thank you.
Thanks everyone for the insightful discussion. I really think it left some food for thought.